Hey guys, welcome to the video. Welcome to the channel. Welcome back to another video. Let's have a quick conversation today, guys. Do me a favor as you come in here. Give me a thumbs up to let me know that you can hear me okay and that my audio is okay. Off topic is in the house. Good to have you. NW, Shimmy. Willie Wilo's here. Good to have you as always. I appreciate you being here. Guys, do me a favor and give me a thumbs up. So let me know that you can hear me okay and that my audio is working and is working good. So today, guys, how to invest in 2025 for beginners. We're going to have this conversation. I'm going to allow you guys to do me a favor and give me questions and answers and all the things that you want to ask. Feel free to ask them, right, during this time of this live, guys. Hey, Queen, Jesse, Manuel, good to have you. Audio's great. You can hear me. We're rolling. We're rocking and rolling. So listen, the key to this whole live is this. Investing does not have to be complicated. Today, I'm going to show you why. How to invest in 2025 for beginners. And I'm going to try to do some things. I'm going to give you really 12 steps. And they're going to cover a big, broad range of things. And so this live is not like 3 hours long. I'm going to try to give you some basic highlights and overview of how to invest. Listen, I see a lot of people who have no strategy, right? They just invest wrong. They have no rhyme. They have no reason. They have no measured approach. They just invest randomly. And that's the wrong way to invest, right? If you're investing, you got to have some type of structure and strategy and approach to the whole thing, right? And I've learned something in 25 years of building my wealth from a negative $30,000 net worth in the year 2000 when I was 30 years old. I had negative $30,000 to my name, right? To having seven-figure net worth today. You cannot do things random, okay? You have to be intentional about what you do. And your money and investing is the exact same way. You have to invest with a purpose and with some structure and some strategy. And when you invest like that, you become better. You become your money. You give your money a chance to grow, right? So 12 steps for beginners. Now, listen, if you're an intermediate investor, right? You're an intermediate investor. You've been doing this thing for a while too, and you just want to understand some things a little different, and you're looking to build some long-term wealth with a simple approach, this video is for you too, right? I didn't put for beginners or intermediate investors in the title, but anybody can benefit from this, right? Whether you're saving for retirement, you're saving for a big purchase, you're investing for financial independence, you can change your future with what we're going to talk about today. So I'm glad you're here. Hello from Texas. Good to have you. Let's see who we got in here, guys. Let's go ahead and jump right into it. If you have a question along the way, put a Q by it in the chat and I'll try to answer it. And if you're an experienced investor and you're in the chat, help me answer a few questions too if you've been doing this thing a long time. But I want to appreciate you guys being here and say a big shout out and thank you for you guys for showing up. Let's jump right into it. How to invest for beginners, how to invest in 2025 for beginners. Simple investing, step by step. First thing we got to establish before we jump deep into it is, why are we investing? What's the purpose of investing? Why are we doing this thing? What's this all about? Well, it's really about your future. It's really about the power of using and leveraging the power of compounding to help your money grow over time. Because if you don't help, your money's going to either be shrinking or growing, period. If it's shrinking, that means you got it at the savings account, bank down the street in the savings account, and it's getting a 0.0001% interest return on the money. It's not growing. It's going backwards. It's either growing or you're losing money. It's not staying the same. Why do I say it's going backwards? If you got it at the bank in the savings account, is because inflation is eating that thing up. So money grows on top of money if you have it invested in something that's going up in value. That's compounding, the compounding effect that you want to get from your money. Huge, right? You want to beat inflation. So you want to keep money. It's called currency, so because it flows, right? You keep it flowing, it'll keep growing. But if you don't keep it flowing and you go throw it out the window or put it on something going down in value, guess what? it's going the wrong direction. You want money to go up. It's going down for a lot of people, right? So you got to flip money from cash to assets, right? From a paycheck to investments. In this instant today, we're talking about investing in the stock market primarily, but there's other types of investments, right? We're talking about the stock market investments that are assets, right? The other reason we're investing, we want to invest, the whole why of this is to achieve our financial goals, whatever they can be, right? Investing is going to help you reach those milestones of, funding education for your grandkids, or buying a house for yourself, or just retiring comfortably and being able to go travel over to Greece or travel to Long Island, Strong Island, New York, right? Good to have you guys here. Appreciate you being here. If you want to travel to Europe, you want the money to grow so you can take advantage of the money, right? Let's keep going. The second important thing that you got to remember as a beginner investor is you have to first assess your current financial situation. Don't be the new investor who has $20,000 worth of NVIDIA, but you owe $25,000 on a Hyundai car, right? You got a Nissan Sentra that's 10 years old that you owe $15,000 on, but you got $15,000 in the stock market. Don't be that person. Take care of some of the basic stuff first before you jump in with both feet to investing. And I know I'm jumping right into it, guys, but hey, I don't want this to be a super duper long video, and it can if we're not careful. So assess your financial situation. That means get organized, get your stuff written down, do a budget on a monthly basis, do a net worth statement 3 or 4 times a year, have a folder on your laptop, whatever it takes, or have a notebook, right? Where's my notebooks, right? Have yourself a notebook. I keep a lot of notebooks where you keep your stuff organized in. You have to get organized and disciplined to be successful at investing, right? Beginners, intermediates, you have to be disciplined and organized to be successful at investing, to be as successful as possible. So you have to sort of assess your current situation financially. Pull everything up from underneath the rug, right? Open up all the doors to all the closets of your personal finances and start to assess where you're at, right? It's going to help you in the long term when it comes to investing. Make sure you have some cash, some emergency money in case something goes wrong that you can pull from, so you don't have to go pulling money from your investments that you're trying to grow. I'm giving you these basic things up front because it starts with the basics. If you're a beginner investor, right? Pay off any of the outstanding debt you have, right? Do these basic things first, and down the road, investing is going to be easier. It's going to be less complicated. It's going to be less stressful if you do take care of some of this basic stuff. Remember, guys, if you got a question, drop a question down there, or if you're watching this on replay, drop a comment. We'll try to get it answered, right? Third thing, I got 12 of these, but third thing is this. If you're a new investor and you're wanting to try to get started investing even more, or you're an intermediate investor and you want to do more in 2025, please don't approach investing until you understand what risk tolerance is. Okay? Risk tolerance. Who are you in the world of investing? What type of investor are you? Right? And you'll learn some of this along the way as you start investing, because I know a lot of people, they start off investing. Oh, I want to take my chances. Give me some of that. I want to buy some of that. I want to buy some of that stock and that stock and that stock. And then 6 months down the road, man, I shouldn't have bought that stock. Man, I made a mistake. I was too hyped up, right? So you're going to learn who you are as you begin to invest, but you got to start to think about what type of investor are you? What is your risk tolerance level? And it's important because your risk tolerance level will let you know how far to step out on the limb when it comes to investing, what things to try and not to try, right? Everything has risk when you're talking about money, right? Investing is no different. Investing in the stock market has risk, okay? Now, when you're talking about risk tolerance, let's kind of go over this real quick a little bit more thoroughly because it's very important. You need to know your timeline when you're starting your investing in the stock market. in 2025 for beginners or intermediate folks? What is your timeline? Each investor, all of us have a different time horizon, so to speak. It's going to be based on our investment plans. What are our goals with our money? When we want to be done working and when we want to start tapping into the money that we've invested, right? So, like, what are your goals? Do you have investing goals? Do you have them written down, right? Financial goals differ from individual to individual. We're all different, so we all got different goals. What are our ages, right? If you're 25 years old watching this, your age means you probably have more time to invest. You can stand to be a little more risky. If you're 60 years old watching this, you got less time. You got to get to your money in 3 or 4 or 5 years, right? So you have less risk tolerance. You don't want to be as risky, right? So be thinking about that, right? You got to be thinking about it. Also consider your portfolio size. All of this is talking about your risk tolerance, right? These are things to help you figure out how risky you can be when you start investing. How big is your portfolio? Do you have $500 to put in there? And is that just a small drop in the bucket because you really have $50,000, but you only want to spend $5 to start investing? Okay, so your risk tolerance might be different than the person who has $500,000 that they've been saving up and don't know what to do with it, right? And they have $1 million or $2 million, but they have $500,000 that have been sitting in the savings account and they want to go invest it. So how big is the portfolio that you're starting with and that you have and that you want to grow, right? All these things deal with risk and they matter. But a lot of people, flat out, let's be real with it, right? A lot of people start investing in the stock market and they don't think about risk. They have no concept of even measuring risk in their life or knowing what their risk tolerance level is. Guys, drop me a comment below in the chat if you know what your risk tolerance is. You know you're this type of investor. You don't want to do right. If you know what your risk tolerance level is, drop me that information in the chat or in the comments below, right? Let's just see if we know some people that know themselves. Again, you're sort of assessing yourself before you jump into this thing, right? Earlier, I said assess yourself in terms of, where your current situation is, how much money you have. Do you have a budget? Do you have a net worth, a statement? Are you disciplined? Are you organized? Do you have emergency money? Have you paid off some debt, right? Then I said assess your risk tolerance, right? What can you afford to lose? What type of investor are you going to be? Are you going to be risky, not so risky, moderate risk, right? Now, the fourth thing you got to do if you're a beginner investor, and we're talking about how to invest in 2025 for those beginner investors. Before I get there, let me check the chat. Willie Wilo said, I'm into investing, not speculating. Sounds like you have a low risk tolerance level, right? You don't want to do a lot of speculating. If you like doing a lot of speculating, then you're probably going to be over with a whole bunch of crypto and a whole bunch of these stocks that are risky stocks, right? And if you're moderate aggressive, okay, that means that you're probably in the middle. You want some growth, but you don't want to risk it too much. If you're aggressive, like B. Grissom, if you're aggressive, then that means you want to take some risk, right? You're out here, you want to step out as far as possible on that limb so you can possibly get some higher returns. Remember, the more risk, the higher returns. The less risk, the lower your returns, right? All right. Somebody says, I have a tiny bit of crypto. I'm more of a moderate risk investor, right? I'm pretty moderate too. I'm not very risk. I'm sort of risk averse, right? I don't like so much risk. Let's see. I do a net worth statement every year. I'm just looking through the comments, guys, seeing what you guys said. Some are pretty aggressive. Some are not. That's cool. Everybody's different, right? So the fourth thing is this. You need to choose your type of investment account. There's many different types of investment accounts. So what I did in the beginning, the first three things is kind of like the basic stuff, the foundation stuff. Now we want to get a little more granular and dig deeper. There's many different types of investment accounts out there, guys. I mean, what, 401ks, 457s, Roth IRAs, traditional, and IRA stands for an individual retirement account. So you got the Roth individual retirement account. You have traditional individual retirement accounts. You've got regular brokerage accounts, right? What is the type of investment account that interests you? Now, I can't go through the definitions of every single thing here in this video. We'd be here 2 or 3 hours, right? But you have to decide what is the type of investment account that interests you. Sometimes there's more than one. You may have a 401k account with your job, but you also may want to have an individual retirement account at a brokerage account, at a brokerage at a broker, or you may want to have a Roth IRA, right? So you got to decide. You have to look at some of these definitions of things that are out there and decide what you want to invest in. You don't need a ton of things. Let me just tell you guys this. Full disclosure. I run into a lot of people who have a lot of different things, and they think that by having a lot of different things that they're doing the right things by having. So they got like a 401k over here at this old job, a 401k at this old job. They got a 457 over here. They got a couple accounts over here. They got 2 brokerage accounts over there. You really don't need all that, right? I'm talking to the beginner and the intermediate person here. You really don't need all that. Sometimes when you have too much money in too many different places, it's hard to keep up with. Try to consolidate this thing to make it easier for you. If you got 4 different 401ks, try to roll them all into one, or try to transfer them all into one so you're not all over the place and you have so much stuff to keep up with and you don't feel like it and you don't have time to do all that, right? Retirement accounts, traditional individual retirement accounts, traditional IRAs. Those are tax deferred accounts. Tax deferred, that means tax down the road, deferred until later. Tax deferred accounts allow you to contribute pre-taxed earnings, and you can invest in stocks, bonds, mutual funds, and ETFs, but you got to pay the taxes when you get the money out. That's a traditional IRA. Tax deferred, tax later. I'll pay tax later. Let's defer it for now. I'll pay tax later. Those are traditional IRAs. Again, in that traditional IRA, you can invest in stocks, bonds, ETFs, REITs, mutual funds, whatever, right? Roth, let me just explain Roth IRAs because I want to explain traditional and Roth because these come up a lot. Roth IRA, or Roth individual retirement account, has limitations on what you can put towards it, right? The other one has limitations, but they're higher. Okay, so Roth has limitations, but a Roth is an account where you don't get a tax deduction right now. Okay, let me say it differently. Traditional IRAs, you actually get a tax advantage because you get to reduce the amount you put towards it from your AGI or from your overall income right now, right? But a Roth, you have to fund a Roth with money that you've already paid taxes on, right? So down the road, when you go to pull the money out of a Roth, you don't pay taxes, right? Difference between a Roth and a traditional. There's a lot of other things we can break down too. Now, a 401k that I mentioned earlier, that's just a retirement account that's offered through your employer, right? Oftentimes, they will match your contributions. You put in 5% of your gross pay, they will match it by putting in 5% more of your gross pay. Always get the match if you can at a job, if you have a job. That's the low-hanging fruit. We'll talk more about that later. Then another type of account is just a plain brokerage account, where you open that up on your own, right? For example, you go over to, let me just share my screen real quick. I forgot. I haven't been sharing my screen at all, but let me go ahead and open a window here. Let me see if I can find. Okay, there we go. You go over to a place like Vanguard, and you go ahead and open up your own brokerage account at a place like Vanguard or a place like Charles Schwab. Is Charles Schwab up there in the deal? Let's see here. You open up at Charles Schwab, right? or you go over to Fidelity, right? We can go over to other ones as well. But you decide if you want to open up a brokerage account at a brokerage firm. Now, there's all different types of brokerage firms, right? Guys, do me a favor, drop a comment. Let me know, what is your preferred brokerage firm to do your investing at? Robinhood, Interactive Brokers, Charles Schwab, Fidelity, Vanguard. Let me know which one you choose, right? Let's see. Somebody said Schwab. Cool. Okay, Schwab. Somebody said, let's see here. Looking for question, no question. Okay. Somebody said M1. Okay, great. Fidelity. Somebody said Edward Jones. Okay, we got Merrill Lynch in the house. M1 again, Vanguard. Let's see here. Fidelity. I use Ameritrade. Very neat. Very neat. Fidelity, Schwab. We even got some Ally there, some Vanguard, some more Vanguard, E-Trade. Me personally, I like Vanguard and I like Charles Schwab. Now, let me give you my idea. Now, let me say this. Before I get into my personal opinion, you got to figure out which one of these interfaces work for you. For me, I have money at Vanguard, but I'm not as big a fan of Vanguard's interface, their platform, as I am Charles Schwab. I think Charles Schwab's platform is very, very, very user-friendly, right? Very user-friendly. I'm a bigger fan, but I work with both of them. I also work with Fidelity. Fidelity is very easy to use too. You have to figure out what works for you when choosing a platform to do your investing on. Okay. Totally up to you, right? Let's see. I see another E-Trade. See Fidelity. Let's see here. I see somebody said Janus. Okay, cool. Right? But you decide where the platform that you're going to invest on is. And each one of these platforms, they have apps on your phone that you can have as well. So keep that in mind. Guys, don't forget, by the way, drop a comment below. I mean, not drop a comment. Hit the thumbs up button below. I haven't seen Mrs. Moore in the chat, but do me a favor and hit the thumbs up button down there as we continue. By the way, let me also say this as I broke off for a second. My partner in crime is Mint Mobile. Mint Mobile, by the way. Mint Mobile offers premium wireless services. Guess what? Only $15 a month. You heard it right. Right now, for new customers, Mint Mobile's offering 50% off their 12-month services, unlimited plan. Best deal they've had. It's only available for a limited time. You get high-speed data, unlimited talk and text on the nation's largest 5G network. And you can check this out. The beauty with Mint Mobile is you can even bring over your own phone and keep your current phone number and all your contacts and all that stuff. But it's pretty easy to do, switching over to Mint Mobile. I've been using them for almost a little over a year now. Super duper satisfied. If you want to save some money, click on the link in the description box. It'll be below in this video. Sign up and get your premium wireless services at Mint Mobile. Had to mention them. They're my partner on most of the videos I do. I don't have a lot of businesses I deal with, but I got to use it and I got to like it. And I like Mint Mobile. That's my channel partner for the most part, guys. I'm a user and I'm a fan. So let's dig in here. In terms of choosing your platform, let's keep going. Choosing your platform. Now, brokerage accounts allow you to buy investments at the brokerage accounts. I like to look at brokerage accounts sort of like I look at bank accounts. When you go to a bank, you have your money at the bank, but while your money's at the bank, you can also buy things at the bank. You can buy CDs. You can buy a whole host of products that the bank offers to you. Well, when your money is at a broker like a Vanguard, you're allowed to buy investments there while your money's at Vanguard. Stocks, bonds, mutual funds, ETFs, whatever, right? Banks hold money. Brokerage accounts hold your investments, hold money too, but they hold them in investments, right? Wherever you choose, just be sure to check the platform. What are you comfortable with, right? What are you comfortable with? Now, the sixth thing, and I'm on to number 6, The sixth thing you got to do, and I'm looking at this thing step by step. Notice I started with the basics, and then we're getting a little more granular here. How to invest in 2025 for beginners. The sixth thing you got to look at is you have to develop your own strategy and have your own individual investing plan, guys. This means your own goals. Now, I kind of pause when I say that because I'm going to be honest with you, man. I'm going to be honest with you. I really haven't seen a lot of people that have a written plan for their investments. I've rarely seen people that have a written plan for their investments. Let me kind of show you what I mean. I'm still sharing my screen. Let me show you a little bit about what I'm talking about real quick. Give me a second here. Here's what I'm saying. On your screen before you is my plan for doing individual investing, individual stock market picking, and individual investing in individual stocks. So when I say you have to come up with your own plan, this is my suggestion for a beginner investor. And it's my suggestion because most people don't do it this way. They just fly, they just go by the seat of their pants. However they feel in the moment. Oh, I saw an article about this stock. Let me invest here. Oh, I saw somebody on TV talking about that stock, or on Twitter or X, whatever, talking about, let me invest there. But I'm saying if you want to do this thing right, come up with your goals. Come up with your core values. Come up with what you believe about businesses. Come up with your risk tolerance, like I talked about earlier. So be thinking of all these things before you jump both feet into investing as a beginner investor, right? You got to know, what are you willing to risk? When do I need the money? How long do I have for this money to compound and grow in these stocks and in these ETFs and index funds, right? Start thinking about this thing at a different level as a beginner investor so you can win. The thing you want to do is okay, this is what I learned about money also. Let me throw this nugget out there. Is when it comes to money, and I'm talking America, UK, wherever you live, if you can find a way to be a little bit different than the crowd, you're probably going to come out a winner when it comes to money. In other words, everybody goes left, you go right. Everybody goes up, you get what I'm saying. When it comes to investing, almost nobody. Guys, let me know in the chat with a yes or no. Yes or no. Do you have a written investment plan and a strategy that includes your values, your philosophy, and your strategy? Let me know in the chat below, yes, I do, or no. Do you have it written down or on a spreadsheet? Let me know. See, I've talked to a lot of people, and I've talked to probably 500-600 people. I'm going to say that 98% of them do not do this. And I appreciate you guys being honest. We got a no. We got a no, sir. A not yet. A no. Somebody said yes, Steve. Appreciate you, Steve. Somebody said no. No, let's be honest, right? We don't have to, nobody's checking. You're not getting graded on this, right? So most people do not even approach this level of investing. They don't do it. They just invest, right? I mean, people will write down a lot of things in life, right? People will take a piece of scratch paper and write down a lot of stuff. But something as important as money, most people don't write it down. As important as investing, most people don't write it down, right? I'm telling you, as a beginner investor, an intermediate investor who wants to do things differently and wants to do things right, wants to do things in order, wants to really grow money long term, do it differently than the crowd, right? It's gonna set you apart. It's gonna give you much clearer thinking. See, when I see a stock that I'm interested in, I don't just go buy the stock. I go right to this piece of paper right here. It's right up in front of you. I go right to this piece of paper right here, and I start looking at my philosophy. Does it fit my philosophy? Does it fit my strategy? And if it doesn't fit my philosophy and it doesn't fit my strategy, I don't go for it. As Warren Buffett said, you only need a few winners, right? When it comes to stocks or ETFs or index funds, you don't have to be hitting home run after home run after home run, right? You hit you a couple of singles here and there, hit you a double there. Ooh, very nice, right? Bunt, get on base. Next thing you know, guess what? You're scoring runs left and right, right? Now, number 7, after you figure out, what is your strategy? What is your goals? What is your core values? What do you believe about business? What's your risk tolerance? How long do you have? And you put all this stuff on paper somewhere as a beginner investor. Then you want to decide specifically, what are you going to invest in? You have a brokerage account at Charles Schwab. You've taken care of all the other stuff. You're ready to invest. You're getting your match at your job, but you want to do some outside investing. What do you want to invest in? Stocks, broad-based index funds, and ETFs, right? Like the S&P 500, the Dow Jones, the NASDAQ 100, whatever. Or do you want to invest in all those things? Keep it simple. And if you're a beginner investor, let me give you this piece of advice as a beginner investor. As a beginner investor, if you are a beginner, please do not start with individual stocks only. Now, if you want to start with a few individual stocks while you start with ETFs and index funds, better. But don't just take all your $50,000 and start with individual stocks and individual stock picking. You ain't ready for that. Let me say that again, man, because I know there's a lot of YouTube channels out there that are telling you, oh, invest in this stock and invest in that. Listen, if you're a beginner, you ain't ready for that. You don't have that level of sophistication to be picking the right winner in individual stocks. Man, I just got to tell it to you raw how I really believe it, right? And that's how I really believe it. I could get on here and tell you, yeah, you want to put your money in this stock and that stock. Yes, make sure you invest in this stock. I don't want to do that. I want to set you up for long-term success. The best place for a beginner to start putting money and start getting comfortable with the stock market, comfortable with evaluations, comfortable with understanding stocks and the language and the lingo and the the verbiage, is to first get your 401k matched. That's cool. But then when you're ready to get your own brokerage account, open it up and start investing in ETFs and index funds first. Now, and I'm not saying don't invest in individual stocks, but don't make that the only place you start. Right? I want you to kind of hedge against some of your potential losses in individual stocks by having some ETFs and index funds to understand the lay of the land first before you jump in with both feet into individual stocks. Again, I'm trying to give you some common sense investing here, right? Just some common sense investing. Keep the thing simple to start. If you're an intermediate investor, then yeah, you kind of understand the words and the language and you know what you're looking at, understand a little bit about evaluating, then go ahead and get your individual stocks, right? That's cool. But if you're a beginner, start with the basics, and the basics is in index funds, ETFs, a bucket of stocks. That's all they are, right? A bucket. Buy you a bucket or two or three or four. Understand how to evaluate the stocks that are in that bucket. You don't have to evaluate each individual stock, but understand what's happening in the market. What are you looking for when you're evaluating these things? And I understand that in evaluating stocks and individual stocks and evaluating ETFs and index funds are different. But it gets your feet in the game. It gets you understanding. It gets you prepping your emotions, right? Because when you invest in individual stocks, you have a little more volatility. You got to maintain your emotions a little bit better. That's what index funds and ETFs do for you. Then you can start learning what is a value ETF versus a growth ETF. Those terms apply also to stocks. But you start by spreading your risk out a little bit in an ETF or index fund. What is a cyclical versus a non-cyclical? What are the different sectors that are out there, right? What are sector-specific ETFs and index funds, right? You have to determine at some point how engaged you want to be in investing. If you want to have a big old separate screen next to you as you work every day, and you want to be checking out reading all the stuff going on daily and moment by moment with a stock, right? And you enjoy that, and you want to be heavily engaged and actively engaged, great. At some point very soon, you will be involved in individual stock picking. That's cool. Nothing wrong with it. But if you don't want to be that engaged and you want to stay sort of a passive investor that's not so hands-on, then you may want to stick with ETFs and index funds, right? But you have to determine those things and I'm still on number 6 here. I'm sorry, number 7. Decide what you specifically want to invest in: individual stocks, bonds, index funds, ETFs, REITs, right? And by the way, index funds are just a type of mutual fund. You've heard of mutual funds, but index funds are a type of mutual fund that are a little less expensive to own, right? Index funds track an index of stocks, a bucket of stocks, and it tracks the index. Mutual funds, traditional mutual funds, are a little more actively managed because they have managers that are steady putting new companies in and out of the bucket of a mutual fund, of a tradition. So you pay a higher fee for a traditional mutual fund than you pay for an index fund or an ETF, right? So without getting too granular, I just want to keep it kind of high level. So understand, what is your knowledge level? Do you want to be active? Do you want to be passive? Do you want to be all into the stocks? Let me show you one thing you also want to develop as a new investor, and this will evolve over time, is you want to develop, how are you picking stocks, right? So when I say, how are you picking stocks, what's your checklist? Do you have a checklist, right? And I just put up on the screen a checklist. This is just a checklist, my own personal checklist. There's examples that are all over the internet, right? But this is my own personal things that are important to me when I buy individual stocks, right? I look at 4 categories: the business, I look at the leadership of the business, I look at the financials of the business. That's going to be my what's called quantitative analysis. Quantitative meaning the numbers, right? And then I look at a few other miscellaneous things over here. But I look at pretty much these 4 areas to determine if I'm going to buy an individual stock or not. So again, discipline and organization. I'm fairly organized. So when I come up on an individual stock I like, or I think I may like, I run it through my checklist. And then of course, I run it through my philosophy, my goals, my risk tolerance level, and I run it through my checklist. You can develop your own checklist, and you may be saying, hey, this is a lot of work. Guess what? You're dealing with potentially tens of thousands of dollars, hundreds of thousands of dollars, maybe millions of dollars. It's worth the time and the effort to do it right. Right? Most people don't have most people don't want to do all this. But I'm saying this is what you want to do. Right? Run it through your checklist. And you say, well, how do I develop a checklist? Well, you start by doing some due diligence, doing some reading, doing some learning, right? Let's go to number 8. As a beginner, I suggest you automate your investments as a beginner as much as possible. When I say automate, I mean on each brokerage account, whether you get with Charles Schwab, Vanguard, whatever, you can set up monthly deposits into that brokerage account from any of those platforms, right? But when you automate it, it sort of forces you to avoid the procrastination that usually can always come along. Look, when you have a 401k at your job, if they didn't automate that thing, you may never put money in there. I'm guilty too, right? Because out of sight, out of mind. So I suggest early on in the process, you automate it so you don't have to think about it, right? It becomes a hassle to do it sometimes, right? You can set up automatic transfers from your checking account to the brokerage account on any brokerage account whether it's Robinhood, whatever it may be, right? Simple investing, keep it easy, makes for less stress. Don't forget, guys, hit the like button. Drop a comment. If you got a question, put a Q. I'll get to it in a minute. I promise you. I'm going to try to promise you, but there might have been a few questions I missed because I just been rolling, right? I get going sometimes and I don't look back. All right. Let's see here. Is there echo? Let me know if I have an echo, guys. Sometimes I talk a little loud. Let's see. CNS fund. Boom, boom, boom. We're talking TSPs right there. All right. So let me give you a few common mistakes to avoid. This is number 9, is the common mistakes to avoid. Okay. And these are really important. One common mistake to avoid is not doing your own research when you're investing. Don't rely on Kramer, or what is the guy who comes on one of the MSNBCs? Don't rely on them to do your due diligence. You do your own research. That means if you're investing in individual stocks, you go look at a company's 10Qs, right? You go look at their financial statements. And that's going to be a learning process to learn how to read a financial statement for some of you, right? Another one is don't go chasing hot stocks. Okay, appreciate that, guys. No echo. Thanks, Mrs. Moore. Glad to see you here. Don't chase hot stocks, and then don't overreact to when the market goes down. Remember, if you're a true investor as a beginner and intermediate, when the market goes down, you just continue to invest because you're buying stocks at a discount, hopefully at a discount, right? Or at least you're buying them lower than they were, which is always a fun thing. It's like going shopping and now you go to the rack with all the deals on it, right? But don't overreact to market downturns. In other words, as a beginner investor, put your emotions to the side when you're investing. Don't get too high, don't get too low, right? Even keel, invest and keep investing, keep dollar cost averaging. Do not get emotional. This is where people mess up and they make mistakes. When you get emotional with investing, anytime you get emotional around money, you're probably going to make a bad decision. So leave the emotion out of it. Don't get angry. Don't get mad. Don't get upset. Don't get too hyped up. Don't do any of that. Even keel. Just keep investing, right? Emotions will ruin any chance you have at becoming an intelligent investor, right? So the other thing is this: always look at fees. Strive for low fees. You want to have a low cost of owning the index fund, a low cost of owning the mutual fund, right? So pay attention to fees, right? What does it cost? Fees are just what it costs to own the fund, right? Also, be leery of this. Be leery of thinking you're a great investor because you got lucky and you invested when the market was hot or right before it got hot, and all of a sudden, stay humble, right? For the most part, for 99.99% of us, even if you're a professional on Wall Street, for the most part, it's a guessing game. But you want to be as informed a guesser as possible, right? But here's another one, a really important thing, and I'm still on number 8. Never read too deep into the numbers of a company when you're trying to figure out what to invest in, what not to invest in terms of a company. Don't read too deep into the numbers on paper and forget to spend time actually evaluating the other aspects of the company. In other words, don't spend so much time on what we call quantitative analysis. Quantitative analysis is the numbers, right? The PE ratio, the free cash flow of a company when they do after they do their, the EBITDA, right? Earnings before interest, taxes, all that good stuff. The company's debt, right? Or a company's earnings per share. Those numbers are important. And as you learn to evaluate stocks and companies, you'll get all that information. But don't spend so much time on that and ignore what we call the qualitative analysis, the other stuff, the market, the industry that the company is in, right? Just think about when everybody owned Blockbuster. Remember Blockbuster? You rent out movies and so forth. Yeah, we got the Blockbuster stock, right? And looking at the numbers, look real good on paper, but the whole industry was changing, right? And if you look too deep at the numbers of Blockbuster, you would have said, oh, we're doing okay, no big deal, couple of downturns. Next thing you know, the industry, the qualitative analysis you missed out on because the market was changing, right? So don't forget about the leadership of a company, the moat of a company. Now, a moat is, if you think about a moat is like the ditch that surrounds a castle. Normally that ditch is filled up with water, and it's to protect the castle. So companies have moats around them, and the moat is just what is their competitive advantage? Think about a company like let's think of one. Exxon Mobil. Exxon Mobil is a oil is oil energy, what have you. They have a moat because they've been established for a long time. They have good brand industry. They have a good brand name. They have industry trust. They have the trust of all of the folks that are out here. Exxon Mobil, yeah, I can trust Exxon Mobil. They have a moat around them, right? In other words, they have a competitive advantage over some smaller companies that are out there. So think about the moat, right? When you're doing your qualitative, and qualitative again is all the stuff that's not the numbers. Quantitative is the numbers, right? The flip side of that is some people focus too heavy on the qualitative and they're not actually looking at the numbers. So there's a fine line of balance. This is why individual stock picking as a beginner investor is much more difficult than, say, investing in ETFs and index funds, because there's more to look at when you're talking about buying a stock from an individual company. This thing gets really deep. It doesn't have to get too deep, but it can get really deep, right? People make millions of dollars every year investing money, right? Another mistake is this. I said it earlier, but I want to reiterate it. Don't skip over ETFs and index funds and go right to individual stocks. Be very, very careful about that. A lot of people that jump right into investing, that's the first place they go. And oftentimes that can be a mistake. Let's go to number 10. I got a couple more of these. 3 more. Number 10 is tools and resources that are out there to help you as a beginner investor, right? There's free tools. Let me see if I have them up here. There's free tools like Yahoo, right? Yahoo Finance. Let's see right here. There's Google Finance, right? There's Yahoo Finance. There's free tools for doing your analysis of stocks and companies. There's Yahoo. There's all that. Then if you get on a brokerage account, if you go to Vanguard or you go to Charles Schwab or Fidelity, those places have their own set of tools that are pretty much free to people that have accounts there, right? Where you can evaluate stocks and evaluate bonds, ETFs, whatever. Each of those brokerages, they have their own set of tools. That's why I said earlier, you make sure the interface is comfortable for you and it's easy to use for you. And you can do all of your research on those as well. Or you can go to paid sites like Morningstar, right? What else? Market Watch. You can go to TradingView or Seeking Alpha. Those are places where you pay for information, right? Another free site, by the way, is ETF.com. If you're a big ETF investor, there's a lot of free stuff over at ETF.com that you can use. So there's tools out there that are going to help you learn some of the things that I'm talking about and dig a little deeper, right? I got some books. Look, if you're a book person, let me stop sharing my screen real quick. If you're a book person, there's always J.L. Collins, The Simple Path to Wealth. There's Stock Market 101. This is another book I recommend for beginners, right? And anything you can come across, if you're into index funds or ETFs, index funds, anything by John Bogle, the founder of Vanguard, is always a good read as well. But those are a few things that you can begin to, because you got to up your knowledge if you're a beginner investor, right? You got to start learning and kind of self-learning on your own. So some things to think about, guys. Those are some tools and resources that are out there and available to you as a beginner, right? Now, I said it earlier. I'm going to say it again. Start investing with the low-hanging fruit. Get the match at your job if your company offers a match. Take advantage of what your job offers if they offer anything. But be sure if you invest, allow your company, wherever you work, to match or you get their match. Be sure, this is a kicker, be sure that you know what they're offering you and where they're investing your money. A lot of times people will invest and get the match for 15 years, but they had choices and they didn't realize they had choices. They could have been investing in something that was much more riskier, but also offered higher returns, but they were just putting all their money into this low this bond that was giving them 1% interest for the last 15 years. People make this mistake every single day. If you're a new investor and you're getting the match at your job, do your due diligence and research and see where they're investing your money and what your choices are, where your money's going at the job, right? And if you don't like where the money is going, get the match and do all your other investing on your own brokerage platform, right? Something to think about. Somebody said, do I have a list of recommended books? I don't have a full list, just a few things that I like to bring out and talk about here and there for new folks that are investing. Let me see if I have any questions as I get to almost the last one here. Any questions? No cues. I don't think I see a cue. If I missed a cue, go back and let me know and say, hey, man, I had a question. You didn't answer my question. Just drop it right now because I missed a few things, I'm sure, as I glance back through here, guys. Let's see here. Young Start Small. Please post the books as that I can buy them. Okay, maybe I'll add that to the description box, the list of books I just showed. Fantastic. Good point. So I want to say this about how to invest in 2025 for new investors, okay? There's other places to invest your money besides the stock market, okay? And I don't want you to only think that the only place you can invest your money is the stock market, right? One of my absolute favorite investments is real estate, right? So if you want to invest in real estate, that option's open to you also. Look, if you want to invest in gold, silver, I don't know, commodities like corn, wheat, energy, whatever, oil, raw, if you want to invest in land, right? Bonds, whatever. There's a lot of different types of investments, cryptocurrencies, right? Let me not leave that out before somebody get mad and say, you left out cryptocurrency. There's a lot of places to invest your money. The only thing that I think you need to make sure is that you understand what you are investing in. Yeah, somebody said art. Art is a place to invest. But look, don't be putting your money in art if you don't know about art. Don't be putting your money in Ethereum if you don't know anything about Ethereum. Know where you are investing your money, right? Know the space, right? Know the space. I just want to impress upon you that. But most of the principles that I laid out in this video apply to those other investments as well, right? So key principles to keep in mind for the beginner investor and the intermediate investor. Plan this thing out on paper, on a spreadsheet. What is your goals? What is your strategy? What types of stocks are you looking for? Are you going for stocks that are going to be or certain sectors? Are you going into the AI space, into the energy space, into the consumable space? Is there a sector? Is there a certain index? Are you an index fund person? Are you an ETF person? Figure that out and put it on paper or a spreadsheet. The other thing is do it scared. Look, take steps to remove the fear. The more you educate yourself about investing, the less fear you'll have, right? The more confident you are. The more education you have about something, the more you know about something, the more you feel comfortable. Look, there's topics that you could get on stage in front of 10,000 people and talk about because guess what? You've been doing it. You understand it. You know it, right? And if you want to, here's the kicker. If you want to know about something, maybe you don't know anything about AI, but you want to invest in AI, then start to learn about AI before you drop all your money in AI, right? Or a lot of your money. The other thing is start early, right? The best time to start investing was yesterday. The second best time to start investing is today, right now, all right? Start with small amounts if you have to, right? You don't have to start with $700. You can start with $5. $10. Just start. Be disciplined. Stay consistent with your contributions. I suggest dollar cost averaging instead of trying to time the market. You're a new investor and you're trying to time something you don't even know about, right? Think about that for a second. Don't time it. Just start putting small amounts in there. Dollar cost average, just like you've been doing for your 401k for the last 10, 15, 20, 30 years, right? That you've been dollar cost averaging. Every time you get paid, they take out 10%, right? Same thing with investments. Just dollar cost average into it. And don't worry about the fact that the market went down, the market went up, the market went down. Over the long haul, 5, 10 years, it's going to be up typically, right? But commit to this thing for the long haul. And if you've never invested, please, whatever you do as a beginner investor, avoid trading, day trading, and options. Just avoid them for right now. There's nothing wrong with them if you want to do them ultimately. But guess what? You're not ready. It's just like I said, if you're a brand new beginner investor, you probably ain't ready for individual stocks, and you definitely aren't ready for day trading, and you're probably definitely not ready for options. You can get to those things. But first, let's get your feet wet in the door by doing some of the smaller things first, right? You can do those things down the road. But remember, those things greatly enhance your risk, right? The other thing to keep in mind as we wrap up is diversification. Don't put all your eggs in one basket. Invest what you can afford to lose so you're not out here guessing and guessing, playing with, this is not monopoly money, right? Do your research. Don't let Susie Orman do the research for you. You got to do you got to put in the work. Right? And also, I didn't mention this, but dividends, right? Dividends are when a company hands out its earnings, usually it's quarterly, to its shareholders, right? It hands out a portion of its earnings to shareholders, right? So dividends, I like to reinvest my dividends so I can get the compounding effect. And if you read this book right here, John Bogle's Common Sense, the Little Book of Common Sense, if you read this book, you will probably never take your dividends, and you'll probably reinvest your dividends for the rest of your life, because he breaks it down exactly why reinvesting dividends is wonderful for compound interest, right? But that's what dividends are. Keep this thing simple. Don't panic. Remove your emotions. And let's get to, I also in the description box below, I put a playlist of other videos where I talk about this type of stuff in the description box. If you found this video helpful, do me a favor, go to the description box, like the third or fourth thing down there, and click on that list of videos so you can check out more videos helping out the beginner investor or the intermediate investor understand how to do this thing right. I don't have a course to sell you. I don't have anything like that to sell you. I'm just trying to help the regular, average, small, getting started, want to get going at the age of 20, 25, 35, 55, want to start investing. I'm trying to give you the common sense version of this stuff and not the stuff that's tied to, a $10,000 course. Somebody said, is BlackRock a good investment now? Perhaps. It depends on, Jackie, it depends on what your risk tolerance level is, how comfortable you are, etc. Somebody said NVIDIA has been a waste. Woo! Okay, interesting take on that. I'm going back and look at a few of these real quick. Somebody said dividends. Yes. Okay, let's see. Any more questions? Sensei. Somebody said, I love you, Sensei. All right, listen. I invite you on the comments section of this video to leave a question for me, and I'll answer it for you. I'll do my best to answer all the questions that come from these lives that I do. I didn't mean to make this an hour-long live. My goodness. But guess what? When we're talking about how to invest in 2025 for beginners, that's a lot of stuff. And I left out a lot of things, but I hope I was able to offer you guys something of value on this video. If you got something of value, if you got anything of value, smash that like button for me. Share this information with a beginning investor who wants a real basic common sense look and approach to investing, right? So I appreciate you guys more than you know. Susie Orman, somebody taking it way back. Yeah, Susie's still around. Before I go, let me see if there's a question. What else can I do apart from a Roth IRA and a brokerage account if my employer doesn't provide a 401k? Juan, you ain't got to do nothing else. Roth IRA and a brokerage account. Again, Juan, don't fall into the trap, Juan. The trap is if I get a whole bunch of stuff working in a whole bunch of places, I'm doing better. It's not the case. Keep it simple. A Roth IRA that you're maxing out every year at 7,000, whatever it is, or catch up if you're older than 50, a Roth IRA and your own brokerage account where you're putting in as much money as you want, you ain't got to have nothing else. Stop overcomplicating this thing. Keep it simple. That's all you need. Because in that brokerage account, you can get all the stocks and ETFs and stuff that you want. So you don't need anything else. Juan, that's my answer to that question, Juan. I hope that made sense. Somebody said, Latoya said, I'm a new subscriber. I'll be watching your other videos. Latoya, please watch them. And if you have a question, reach out to me. I'm an open book. You can also check out our Patreon over there. You can support the channel by going to Smart Money Bro on Patreon. There's a link to that. You can jump on my schedule and ask me anything, where I sit and have a one-on-one conversation with you for 30 minutes and just answer your questions that you may pepper with me with, or we can go over I do a lot of different things with that, right? Or you can be a VIP on the Patreon that is really, really dirt cheap to have a conversation. So I help people in a lot of where we can do a 2-hour session where we share screens and all that. Check my schedule out in the description box below, and I'm more than happy to help you out with no problem. Smash this like button. Don't get out of here without smashing the like button. All right? I appreciate you. Emily in South Carolina, Mrs. Moore, thank you for being here. I appreciate you as well. What do I think about XRP? I'm not a big crypto guy. I have a 7-figure net worth and a tiny $1,000 is in crypto. That's it. And it's in Ethereum primarily. So XRP, totally, I think that's crypto. Is that the crypto XRP? I think it is. So with that said, guys, I appreciate you more than you know. As I always say, the absolute best person who's going to take care of the old you is the young you. Guys, take good care of yourself and take care of other people. Until the next video, peace.